Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday. It's February the 10th, 2012, and like we do every Friday, we're going to go over all 16 major markets that we monitor at PerfectStockAlert.com. I've updated all the charts. They're always on our website at PerfectStockAlert.com right there. You can check them out whenever you'd like under the chart section. And right now I'm going to go over all of them so you know what I know going into the week ahead. We're going to start off looking at Australia's market. This one we've been looking from a bearish perspective for a while now, just thinking she's rolling over, and that's exactly what's going on. Here's why you know this. Now, you had this move here. Notice that you closed higher than you did over here. Okay, that tells you your potential reversal here. Then you get a pullback, and when you get that pullback, you're looking for a buy opportunity if the low point is higher than this one over here, the previous. And it came down here, and sure enough, reversed and started moving up here, making a higher series of highs on the smaller picture there, and that's your buy signal. That's what you're looking for. So we take advantage of that. We run up here, but notice what happens here. You get the shooting star formation, and where does she close? Way here. Well, it's a lot lower than she was a minute ago. Then you get up here and you close here. Still less than you were a little while ago. You're having a problem, and you've tried twice to break out, so you failed both times, and you're now rolling over. I shorted again. I think she's having a problem breaking out for a reason. I take this high point here at 43.77.5 and set my stop 1 cent above that high point. You could use this one too. Just draw, stop off of that if you wanted to. Trade it however you like. But this is actually not a bullish chart in any way, shape, or form. If you are long, I wouldn't be. A quick look here at the Dow Jones Industrial Average. This uptrend has broken down. We've known that for a while now. You had the breakdown here where you closed below the trend line, then bounced up to it, and then rolled right over and starting to roll back down. I would not be long any of these markets right now, especially the Dow Jones, and I'll show you a few more in a bit. Once they've broken the uptrend line, you no longer have that major support. You can at least say that the momentum or the trajectory to the upside is decreasing, and that can lead to rolling over, which is actually how a top forms. Remember that a top doesn't have to happen in a single day. It can take weeks to develop. But right now, you're not looking at a strong chart to the upside. You are also running up into the overbought territory, the ultimate oscillator. I don't want to be playing on the long side in this market. The French 40 CAC index. This is a chart that we have been whiplashed a little bit in. She broke down the. Let me show you guys what I'm looking at here. You have this rising wedge pattern. It's not a bullish chart pattern, but she can trade within that range for a while. You could have taken advantage of that. And then she broke down, closing below that, and that's typically your sell sign. That's your signal that she's no longer strong enough to hold, and she's going to break down. What typically happens is you get this move like this, she trades within that channel, and then she just slices right down. So when we saw this breakdown here, we took the following move to the upside as a short opportunity, but she fought it. She continued to move on, and we got stopped out. Here was our stop right here. We got stopped out, so we said, okay, fine. You can continue to trade to the long side in this channel, and then all of a sudden she breaks down again today. What are we going to do with that? We're going to short it, and we're going to keep a stop right off of that. Okay, that's the high point. We're going to set a stop off of that. Real small risk reward there. I mean, a real small risk with a lot bigger reward. So that's just how you're going to have to trade that. You're not always not every signal is going to be accurate. Like we saw back in this case here, we just got faked out. But in this case, we've done it again. You keep threatening a breakdown because one's due. And when you're also looking at this chart, you can see that you have a bearish divergence. Let me clear that up. It's where the price activity continues to trend higher. The closing of each candlestick is higher. Yet the corresponding time period, you can look at the ultimate oscillator. You can see that the high points here are trending down. You're getting lower and lower. Momentum's decreasing. When momentum decreases and price continues to move to the upside, it tends to be a situation where you have an unsustainable advance, and so you look for that to be a sign that you look for a short opportunity once price starts breaking down. Once you start seeing this kind of activity, So now if we're seeing it, now we'd say do it. Looking at the German DAX composite, you'll notice this particular chart is not as bearish as the French chart we just looked at. You'll notice that you do not have the bearish divergence formation that we showed you on the French chart. So this one is stronger, but it's still nice and overextended. It's right up there above the 70 line. She's starting to pull back a little bit here. I'm not a buyer at this point in time, and I wouldn't be. I wait for a good quality pullback, and then we consider it right now No, I'm not going to mess with that. One key element here that you should note, you've got a resistance point here, here, and here. So you had to come up here, hit it, bounced off, come up here, hit it, bounced off, come up here and hit it, and bounced off, and then broke out. Let me just draw a little resistance line for you, okay? So you may have had a breakout earlier over here. It was a fake breakout, but then you got a real one. She took off to the upside. All right, this resistance line is now acting as support, okay? So if you're buying way up here, your support's way down here. Don't like that. Give me a pullback and then reverse back to the other side. That gives me a buy point here. Stop right there. I would like that much better. Right now, I'm not chasing that. A quick look here at gold, and you'll notice that this is the only chart, gold and silver, the only charts that we were willing to be long on this week. In the looking at the overall market charts, and gold has just stopped us out, so we're no longer long gold, and we won't recommend that because you've broken the uptrend. Notice uptrend line right here, and when you close below that, well, the uptrend is over, and that's exactly what you've done. You closed today below that trend line. You can bounce back up to it or even above it, but I'm not going to be a buyer in this particular market. A lot of our markets are just overextended, and we've been running out of opportunities on the long side for a while now, and that's fine. It's the market's way of telling you, get out. Take a look now at the Hong Kong Hang Seng Index. You'll notice right off the bat you've got a nice resistance line here, here, and then you broke out here. Let me draw that out. Something like that. Alright, something like that. Anyway, so you broke out here and started moving to the upside. Got lots of hanging man candlestick formations. At this time, we were telling you to keep a stop right here. She continued to advance, that's fine, but do not chase it. She continued to advance, but notice this. High points are in the closes. If these candlesticks are trending up, what's going on up here? Trending down. This is a non-sustainable move to the upside. I would not be long. The BSE, or the India Bombay Stock Exchange, you'll notice this one has had a nice move to the upside as well. We actually did not trade this in any way, shape, or form. We've watched it just move with the overall market tides higher, but we did not trade this. We found stronger charts to trade instead of this one. And this particular moment in time, I wouldn't be trading it either. It's not a real strong average out there. It's not a market that's really strong out there. It's just rising because all other tides are rising, and therefore this boat is going up with it. But you'll notice high point here, a little slightly lower point here. You're trending down with that, and you're trending up with the same time period between here and here. Not going to be playing with that. EWJ, or the Japan iShares, same story. Bearish divergence in play. It's finally broken down, give itself a lower low. That's an important start of a breakdown. When you've got this move here, note the low point here, higher low here. All right, there's actually back there as well. And then all of a sudden you drop down here lower than the previous. Well, the next move likely be a test of the previous high, and if you get a test of the previous high that fails to break out and starts to roll back over, then you're getting the start of a change in direction from an uptrend to a downtrend, and we want to look for that opportunity. But right now it's too early to be shorting. Wait for the secondary move back to the upside before you start looking for whether or not she's going to break out. I don't think she will, but we'll just wait and see to make sure, because what I think doesn't really matter to the markets. Let's see what the markets are really going to do, and then we'll trade on that. Right now I wouldn't be long, because you do have this nice move that you're going on here that you knew just from looking at this chart that this was setting up to be unsustainable. You would expect a breakdown. Now you've seen the fall lower than you had before, and then you should not be long in any way, shape, or form. The London Financial Times Index, or the FTSE, this one has actually been one of the strongest charts that we've had globally for a while. It has a real good technical pattern to it, real tight trading range. It's a really sharp pattern, nice consolidation, nice basis. And we got the tools, so I'm going to stop rambling and start drawing this out for you. Here's your resistance point here. You pull back here, come up here, hit resistance again, pull back again, a little bit shallower, starting to form what could potentially be an uptrend here, and then you get the breakout where this resistance line is no longer respected. You break out and you start finding support at that level. Okay, this is fine. She's drawn a little false breakout here, pull back down to the same support level, and break out again. Again, it's acting more like a false breakout. She's having a hard time really taking off here. Why? Let's just go with Greece, and that's a really big issue right now in Europe, and it's causing a lot of havoc in the markets, and I don't believe that it's actually over, and I would be really concerned if I were you on what's going on over there in Europe. I keep a sharp eye on it. I know the market's going to try to tell you from one day to the next that problem solved, next day problem's not solved, and then, you know, vice versa. It's been going on for so long, people have just gotten complacent here, and we're just like, oh, whatever, Greece. When it collapses, it will be problematic. The NASDAQ Composite, what you're looking at here is basically a pretty strong uptrend. It's not broken down yet. You still want to trade it? You can. It's up to you. As long as she maintains this main uptrend line right here, then you're still fine to the upside. You're still making higher series of highs and higher series of lows. No disrespect for that in any way, shape, or form. You also notice your highest point here on the ultimate oscillator is right there. So you are getting confirmation of momentum increasing as price increases as well. There's not a problem here. As far as I know, and I had to go through and look again, this is the only chart that doesn't have a breaking down of trend or something like that already. It isn't showing any problems here. So whenever you're looking for your long opportunities, you may want to look at something that's going to be tied to the NASDAQ as opposed to the Dow Jones or something of that nature. You know, I would still keep in mind that if global markets begin to fall because of Greece or something of that nature, you will see the NASDAQ follow. Oil is a pretty strong chart, if you ask me. What we have here is a breakout. You've got resistance point here, resistance point here, breakout, fallback. Let me draw it out. Here you are. La la la, la la la, something of this nature. Okay. And what we have here is this sell-off here, move back up, test it, fail, and pull back down. Don't go as low, jump up, pull back, and jump and break out. When we had the breakout, though, we have not actually. I mean, we got a nice gap and everything below it, so you need to consolidate. She pulls back down below it, and we break out again, pull back to it, and we rally off of it again. Now we're getting stronger. Notice that this time back here we pull back below it. The previous resistance line acting as support starts happening here. So this time, when you pull back here to the middle Bollinger Band line, I'd be looking for a buy opportunity in oil. Tight stop, of course, but she can continue to move higher. U.S. Dollar Bullish Index Fund, UUP, we've been trying to call a bottom here. Basically, the strategy here is once people start selling equities, they'll be, in effect, buying dollars. That will drive up the price of the dollar. We've actually not been effective at calling the bottom here. We got stopped out, even though we know it's right around the corner. And here's why we know that. Note this low point here gets higher, higher, higher. You get this little uptrend activity. The close in the same time period of price activity for that time period is going lower and lower and lower. That means this move to the downside here is not sustainable. We're looking at a bullish divergence formation here. That means that all this slide is happening here in price activity is not sustainable. It's going to bounce back to the upside. However, look at this high point, 22.18, 22.15, 22.06. That's not actually the high. The high was 22.08. But the point I'm drawing out here is that the high points have not changed. We're still getting lower lows in price activity, lower highs in price activity. We've not seen price activity actually begin to confirm what I'm telling you on this chart is showing us right now as a bullish diversion. We should look for a move to the upside. Until price starts to confirm it, which will require equities to start selling off, until that happens, you probably don't really want to get into this. You're trying to catch a falling knife, so just sit back and wait. The Russell 2000 Small Cap Index. Need I say it again? Probably not. You already see it. You've got your little downtrend going on here, a little uptrend going on here. That's a bearish divergence telling you that this is not likely sustainable. Look for a pullback that's going to take out a low point. Once you get taken out of low point, then you will wait for the next bounce to the upside to see whether or not it makes a new high. If it doesn't, then that's your short opportunity. You will start shorting that and expect that the trend has shifted and she'll start moving to the downside. Not yet, but keep an eye on it. The S&P 500 Large Cap Index, you'll notice here, same old story, resistance point there, resistance point here, resistance here. We just draw that out, and we can see that now we have a breakout here and started to advance off of that point. Now we're starting to roll over a little bit. Well, we may pull back here and test this previous resistance line, but right now I don't want to be a buyer, but it is a very strong chart. I'm not going to, there's no sugarcoating that. It's a strong chart, and you do want to be involved if you get a good quality opportunity, but right now she's just not given any leeway to get you an opportunity to get in there. However, this chart should be checked against the VIX, and I'm going to show you that in a little bit because it's the opposite of what you see right now. When you look at this chart, the S&P 500, and you compare it against the VIX, you're seeing confirmation or refute of what you're looking at. So we're going to look at that at the last chart I look at today, and I'm going to show you that it is not confirming this strength here, and that's why I'm not involved. Alright, silver we have traded a couple of times, made some good money on it. She's consolidated, moving to this, sideways right now, not actually doing anything. She's not broken down, so there's nothing to stop us out of our trade here. Our most recent trade was here. You can see we have a stop set off this point right here, and she's just moving sideways. That's all she's doing, and as long as she continues to do that, we're fine with that. If she breaks down below our stop loss limit, then we're done with it. What she's actually consolidating upon is previous resistance point over here, and that resistance point is what we are actually balancing on or staying upon. As long as we're in that position, that's fine. If you get consolidation moving sideways and or break out this little channel here, you break out to the upside there, and yeah, you're going to see a nice move to the upside. If that does not happen and she breaks down, then simply walk away. Canada's market, TSX, we've been bearish on this one for a little while. Not been taking any positions, but we've been noticing this major move here, not confirmed by the ultimate oscillators, telling us that momentum was not behind it, and we were expecting it to be rolling over and breaking down. That's exactly what's happening. Note this low point here is lower than this low point here. Also, today's low point here is lower than this one. You're rolling over. Okay, just a moment ago we looked at the S&P 500 Large Cap Index. Now we're looking at the VIX, the Volatility Index. This runs the inverse of the S&P 500 from an options analysis. What you're seeing here is a series of higher highs, and this is important. Back here we were seeing move here, lower point here, move here, higher high, and then pull back down. So we try to take that buy opportunity. We got stopped out. Now she's done it again. These are signs telling you that the market's trying to reverse. The S&P should be in fact breaking down, but it's not showing it. So one of these two charts is lying. Either it's the VIX or it's the S&P. I tend to believe it's the S&P. We'll wait and see. What I would do with this chart, if I got any kind of a pullback from 2079 or lower, anything in here, I'd be a buyer. This is my stop. The low point at 1610. I put a stop 1 penny below that point, and that's how I would trade that, because you've got this high point here, higher high here, close in that range somewhere, higher close here. Everything is showing a reversal in price activity here, so I expect this to be telling you that there's something amiss with the overall markets. They're overbought. That shouldn't be a surprise anymore, right? Okay, enjoy your weekend. God bless, take care. If you've not been to our free website at perfectstockalerts.com, well then you're just a loser, because it's free, and I'm there. Okay, I'm kind of lonely. Come visit me. Later. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.